Good afternoon, guys. Today is Wednesday, October 16th, 2024, and I'm going to do a trade recap on NASDAQ futures. So let me add my executions really quick so you guys can see that today I took two trades, all streamed live, and today in the beginning of the morning session I had my mic on, and you'll hear me talk and explain the logic. And then later on, I had to mute it because my roommate came back. So let's start off with what I saw before 9:30 opening. So let's kind of do this. Okay, let's use the market replay tool. So here's what I'm looking at prior to 9:30. No, actually, this would not be there. Here is what I'm looking to prior to 9:30. So first thing I'm looking for is our primary buy side, or drawn liquidity, or we wouldn't know that yet, but so the buy side today was my drawn liquidity, but I'm going to mark out the primary buy side and the primary sell side, which I use the 15-minute time frame to do that. So here's our primary sell side, and so we have both primary sell side and primary buy side marked out. I'm actually to make this easier, I'm just gonna move all drawings and now do that. Here's primary buy side, and here is primary sell side. Okay. So I'm waiting for one of these to be taken out. And so if the primary buy side gets taken out first, I'll aim for the primary sell side. Or if the primary sell side gets taken out, then I would look for turtle soup to primary buy side. All right. So 9:30 opens, market drops drastically, and the opening range gap is around 25 handles, which is not a big enough opening range gap for me to want to trade in the first 30 minutes, the opening range. So in the live stream, I said I would wait till 10 to trade. And if you actually go back and watch, you'll see that I actually broke that rule. And that resulted in a losing trade. Surprise, surprise. So here's the first fair value gap at 9:30, right here. I'm actually going to add all the drawings back, so. Okay. So there we go. There's our first fair value gap at 9:30. And I just added all the drawings back so you guys can see the new day opening gaps and new week opening gaps. Okay. So when I see this, I'm still not taking any trades, right? I'm waiting till 10 o'clock. So price starts to drop. Look how it reacts off the order block. Drop even more. Then I notice this. Hits the order block. Bodies respect this fair value gap right here. The low of this candle and the high of this candle create this fair value gap. Bodies respect it. Moves lower, lower. Takes out the buy side. Continues to move lower. And I think here's where I took my first trade. right here off this tiny fair value gap. I rushed it, and I know that is why I took the trade. I was just rushing and I wanted to get into a trade. It was the macro, and that was a stupid decision. Clearly, because this wasn't enough of displacement, not only did we displace with this green candle, but this next candle didn't continue to keep displacing. So that in itself was a red flag and a sign not to buy. Anyways, but my bias remains the same. I'm still looking for higher prices. So in the live stream, I said that I would be willing to re-enter, but I would have to use half the leverage I originally used. So let's continue watching price. So now I'm still waiting for that displacement. Look how the bodies are reacting off this new week opening gap on October 7th. Here's our displacement, right? Nice. Look at these two beautiful displacement candles. Look how big the body is. Okay. So here I mark out the fair value gap. And here is originally where I wanted to enter. This is where, if you check the live stream, I put my order there. Look at the next candle. The candle next to that. It just barely misses my entry. Then it starts going higher. Leaves that fair value gap open. Creates another fair value gap. Leaves that open. And let me get the executions. I think, okay. Well, I'm just going to show what price did, and then we'll get to the executions. So I entered off this fair value gap right here. I think I entered right here where my cursor is. Off the new day opening gap. My stop was right here. Almost gets my stop hit. Goes higher. First partial. Low of the opening range gap. Hits that. Starts going higher. And then stops me out at break even. And now I will show that off of market replay. Okay. You see this? Here was my entry. You can see it right there at the high of the fair value gap. Exit. The lowest tick on the range inside that fair value gap, that the bottom of the fair value gap. Then I re-entered here off this fair value gap. Well, draw it in. Entered here. First partial. And then stop at break even. I think my total on the day was a loss of $70, I think. Maybe $60, $65, something like that. And today could have been a profitable day had I just waited for proper displacement. And what I mean by that is displacement that actually shows speed and distance. Like, for example, this is one candle that I thought showed those properties, but it was just one big green candle. Wow, this is the real displacement. One big green candle, followed by another one, and then retraces. And then you see how that just starts to accelerate price, and it moved higher and higher. By the end of the day, I don't think buy side was taken. Yeah, buy side was not taken. But that's why it's important. Oh, I'm combining words there. That's why it is important that you take partials, because there's no guarantee that the price is going to go up there and hit what you want. So this is a classic example of turtle soup. And I really do recommend that you guys go back and you watch the live stream labeled, I think it's NQ Trading Live Session, October 16th. And there's very valuable insights. Have a great day.